Ladies and gentlemen of the crypto space, we're live on a Monday, April 22nd at 11:31 a.m. Bopping a little bit to that intro music nowadays. Well, this is a one-player game. Here with yourself, playing by yourself, for yourself. You can obviously say your family, and it's not friends. You're doing this for yourself and your family. And that's a one-player game. If there's multiple players involved, and someone wants to capitalize, someone's going to capitalize first. Order of operations, you got to be in it for yourself. And that is just something very important to understand about finance, especially as these markets that a lot of folks engage with, these crypto markets, folks seem to think it's a team sport. More than one person can win, or rather win the most, but only one person could win the most because the second they win, they're out. And that means the next person is capitalizing less. That's the nature of capital gains. That's just the way it works. This is the only way to understand these markets. There's no two winners. You either win or you don't, and you're playing against yourself. I like to remind myself of that, especially more and more nowadays. And if you are truly playing a one-player game, you're playing against yourself. It's not really about what other people are doing because this market is heading in a particular direction toward a destination. So the mastery of yourself, your emotions, the execution of logic and reason will allow you to join this market as it heads towards its destination along its path and journey, which drive most people crazy. But as you evolve yourself and your capacity to execute rationally, the path, the journey doesn't mean as much as most people think. The path of the journey is a learning process, an education process, an acclimation process, but the destination is going to remain unchanged. It's pretty much mathematically set at this point. And that's refreshing. It's reassuring. It's disappointing from a societal level. It's disturbing, unfortunately, what is going to occur. There's no real way for it to not occur. It's baked in the cake. So, in that regard, if the destination is pretty much certain to a degree, it's time. And time does the work. Time is everything. So I share with you a story that I have over the weekend. I was talking with a cousin, and every once in a while, family asks me how I do what I do. And there's no real way to compress years of education and experience into mere sentences. And in that regard, um, what is a reasonable thing to say? Probably the most reasonable thing I could tell this cousin was to start accumulating assets. And I mentioned like just DCA, Bitcoin, Ethereum, and Solana for that matter. And obviously that's relatively short-sighted considering the destination of where we're heading. And the point of the statement was to try and train a person to start thinking in terms of accumulating assets, have a collection, which is very consistent with the way kids you think about like collectible cards or trinkets and whatnot, and small little dolls, or I don't know, whatever people like to collect nowadays. And that's what I wanted to teach this cousin. And they're like, well, what is my expectation? It's not really what they said, but I know that's what they were thinking because that's everyone trying to get in on these markets. And I told him very clearly, stop thinking in those terms. Stop. You are not prepared to navigate these markets. You're not prepared. You don't have the mindset to to think or digest opportunity. The first step is you want to have more assets in the future. So, which means they're going to miss out on this entire cycle that we know is coming because we have a past, present, and future perspective on where the hell we are and where the hell things are heading. And that is probably the best thing for this cousin to do. And then I said, we'll check back in 2027. And you should have more assets. Don't look at price. Don't look at the insanity going on. You are going to mess yourself up. We are our own worst enemies. You cannot engage with these markets unless you're calm, cool, and collected. You must be able to see a ridiculous opportunity and be like, okay, I'm not doing it. You don't need to do anything. What you need to do is the right thing. And the right thing is something you have to define. But that requires a self-education of how to not engage with anything unless there's a reason and a well thought out reason behind it. And that's not something I could convey to my cousin in a mere short couple of sentences. And let's see what they can do in a couple of years. They should have accumulated assets, and then we could talk because now you were able to go up and down and DCA the whole way, and you have more assets than that I prescribed 4 years' time. And I look forward to that. I have yet to have one particular family member really want to be educated. And I offer it all the time. Folks ask me my thoughts. Oh, have you seen the Bitcoin price? Of course I've seen the Bitcoin price. Family comes to me and says, have you seen the Bitcoin price? They all know what I do. And I find that perspective of I think often that's what you're asking. So that means it's just a complete different world or a different train of thought. It's a completely different mindset of someone, clearly not me, trying to understand what the hell is going on. So that's just a fascinating thought that I had this morning. And as you get more evolved, as you elevate your capacity to engage with these markets, you realize more and more, hopefully, it's a game about yourself, your capacity to define rules of engagement and execute those rules predictably, consistently, repeatedly, over and over again. There's plenty of shit that I see that's very exciting, very interesting. I can't engage with it for a variety of reasons. Maybe I just don't have the capital. Maybe I can't have the position size that I want. And that's enough. That's all I need to know. So how do you train yourself to be able to skip an opportunity? Was it actually an opportunity if you could not have the appropriate position size? Which means you didn't have the amount of capital. Which means lack of capital means you're limited in opportunities. Accept it. Own it. Digest it. Process it. Because if you try and fight that, the only person you're going to hurt is yourself and your portfolio. You can't overextend. You can't overplay your hand. Respect your hand. Respect your portfolio. Respect the tools that you have. You know, it's kind of like, there's obviously risk reward. For instance, a contractor, like you're a novice contractor, you don't have the experience, and you take on a ridiculous job. Sure, if you nail the ridiculous job, you did great. If you come up short, that doesn't look so good. That doesn't work out so well. Don't overplay your hand. And that's one of the skill set that I have, is to see the relationship between things, like we're talking about finance and capital management compared to business and even cards, overplaying your hand, overselling something. You want to underpromise, overdeliver. And the most important person to underpromise and overdeliver to is yourself. And that's what's so fascinating about these crypto markets, because You can do that to such a great extent. If you underpromise yourself, you're going to be much more emotionally content, capacity to pass the time, and this market is going to overdeliver. It's, it's just a fascinating degree that this market is going to overdeliver. I think very few fully have that forward centric vision of where things are heading. And it's quite extraordinary. Market's going to do all the work. And as I told my cousin, all you need is just exposure. You need assets. But how the hell are you going to teach someone what type of assets? You have to realize that for yourself. What do you want? Because technically, what assets you want is an expression of your interest to meet your expectations. Anyway, that's what I was thinking. I tried to help family as best I can, just like I try and help all of you the best I can. And all I know is that this is my game. Just like every one of you has to find for yourself what game you want to play. I don't diminish capital gains methodology, social trends, popularity, virality, volume hunting. So be it. All I know is statistically that's not favorable to be consistent wins. And therefore, I rationally choose that to not be something I do when I engage with markets. And because of that, I have been successful meeting all of my expectations to at the wildest extent that I could have imagined. But my expectations aren't turning $100 into $10 million, $1,000 into 9 figures. It's not my expectation. It's not a reasonable, it's not a rational expectation. We're heading into a world, expectations are broken. What is that? Uh, uh people want, and then want is not a need. I think about this a lot from my children's perspective and how to teach humbleness. More important now than ever, with the disparity that's coming, and there'll be civil unrest because of the disparity, but you'll be seeing what other people have. And that has a way of fucking up people's expectations. How do you achieve that? The start of this stream is how you achieve that. A one-player game against yourself. I love the metaphor of jumping on a train. And that's really what I expressed to my cousin. How do you get on the train? How do you even think about getting on the train? You got to have some assets. Get off zero is a very common theme for folks in the macro landscape talking about the crypto space. Get off zero. Just get off zero. That's step one. And then it's years of education to figure out where the hell you're going to go from there. But you got to get off zero and be able to allow time to pass. So that means you got to go through a cycle. You're not making progress, or you're not progressing towards a capacity to manage a capital without going through a cycle. And what is a cycle? No magic, mystical crypto cycle. It's all financials, macro financials, global economic financials, which is a bit of an education process. I'm sure you can listen to people like me and plenty of very prominent macroeconomists, skilled persons, seeing the way the world works. But that is important because the better you understand that, the better you understand ways that you can engage with the market to increase results. The better you increase results, the better you meet your expectations. So stop trying to jump on a moving train. That's like what capital gains is the train's getting out of the station. People are already on board and it's moving and it's already up 50%. And you're trying to jump aboard a moving train just to try and jump off the moving train at the right time when you're at a station and not in the middle of the damn desert. I mean, it's clearly irrational. But, you could jump on and jump off at the right time. Plenty of people do it. Anywho, anywho, uh, uh, let's look at some charts. I'm going to answer every one of your questions because that's what we do here. We are a Q&A stream. So if you're on X or Twitter, post anything that's on your mind. I'm more than happy to talk about anything. Bitcoin's above 66K. I mean, it's double touch on like 59 and change. We're just coming out of post-halving. The passive flows are extraordinary to sustain this type of price action at this time in the market. They're at all-time high pre-halving. The buy pressure compared to supply was before halving completely different than historic, and now after halving is just all out of whack to the favorable side. Bitcoin's going to appreciate significantly in all likelihood. Um, and that is an interesting thing for cash consideration. It is clearly a very favorable time for the cash denomination to be that of Bitcoin. And it could be other things as well. We sure as hell talk about that to great extent, what denominations you could have the cash position in. But Bitcoin's a lovely denomination. And you have to do what is most comforting for you. If you're comfortable with something more volatile, like a meme coin, or an Ethereum, or a Solana, notice I said meme coin because that's a pretty crazy denomination for a cash position, but that's how I define it. Define it for yourselves. It's it's not it's not it's not ownership. It's liquidatable. It's sellable. So it's a denomination for the cash position. So quite remarkable at 66. Ethereum's been lagging, which is interesting considering it's deflationary at this point, and Bitcoin is still quite inflationary. Albeit gas has been pretty low in the Gwei region, so Ethereum has been increasing supply, probably slightly in a very transitory way because the second volume picks up. There goes the burn factor. And the odds are quite likely it's going to be very deflationary on average into the future. So that means a lot. And that's a great example of why, deflationary tokenomics versus even inflationary isn't the end all be all of price action. Decreasing supply results in increased volatility because a certain amount of capital can move a certain amount of supply X amount of percent. So you have less supply, you have more volatility. So I favor disinflationary tokenomics rather than deflationary in many regards, because when you're inflationary, you can throw around incentives, which is an interesting topic we discuss. But in the end, clearly, what we're going to see is a gamut. You're going to see an endless list of these monetary policy type experiments. And that's what we talked about a lot in 2020 and 2021. All of the monetary policy experiments. Everything in like 16 and 17 was all just Bitcoin forks. It was all the same shit over and over again. Other than Mastodon, that was quite innovative. So point being, you're going to be surprised what is effective. You'll see inflationary monetary policies that are quite effective and will do very well. And that's really the emissions protocols that we see. And then the fun thing was, how do you understand that system, why and how it works? And that's why we brought in nation state comparisons and deficit financing and sterilization and recycling, which is the mechanisms that allowed nation states to do what they did over the last 50 years, especially the United States. So interesting comparisons to make to understand the likely trajectories of these systems into the future. Because even if you have an inflationary monetary policy, Bitcoin is inflationary, disinflationary, but still inflationary, supply could easily not meet demand. And there's your appreciation. And that's the case for plenty of other protocols. And frankly, Bitcoin, it fits the same definition of our favorite incentive incentive protocols. Deficit spending. That's how Bitcoin finances mining, by deficit spending, by increasing supply over time. And it has a different sterilization mechanism, and that has to do with like narratives of self-sovereignty and expatriation of capital and uh, immutability, where you the which is security of your assets. So those are all considerations, and clearly voter escrow plays into that. V33 especially plays into that. So that was actually a tweet a little bit ago. It was the four bifurcations of incentives that I saw as probably the most significant and reduces all of this crypto activity, and that's proof of work, proof of stake, VE, and VE33. In my opinion, those are your four big financial primitive innovations um, in the entire crypto space with regard to bifurcation of incentives. And as we've discussed extensively, incentives are everything. I am on this stream because I am incentivized to be here to tell these stories so I could better understand these stories, better understand myself, and better understand the world around me. I am incentivized to invest because I want to meet my expectations, and you need to engage in financial activity to continue to exist as a human. So I am incentivized to engage in this behavior. There is find the incentive beneath everything, and everything will have an incentive, which is why these markets are so fascinating, because the incentives are relatively novel. Uh, Everything is relatively traditional in meat space. There hasn't been much financial innovation in quite a long time. And these particular primitives, just mentioned, the four novel primitives that I see, are remarkably innovative. And what does that mean? That means it's going to garner a lot of attention, because a lot of these incentives come in the form of percentage signs. And that tends to get people acting in a big way when you're talking about globally accessible emerging markets. And that's what these markets are. So this is going to garner a lot of attention, more and more and more, in a secular adoption wave. And we're at the trough of the cyclical wave. The trough. It hasn't even started. It's quite exciting where we are, for lack of a better way to say it. It's just the beginning of it's going to be a magical couple of years, which is also disappointing from a societal perspective. We saw that Elizabeth Warren fake news circulating. But that's what they're thinking. Wealth tax due to the incredible outperformance of crypto markets. The U.S. institutes a 1% wealth tax on everyone, because obviously the crypto markets are inside of the United States of America. They're not. These markets are expatriated capital. These markets have crossed borders. They have left the region. They have departed the territory. A whole nother level. Expatriation of capital is one of the biggest, most sought after things around the world. The capacity, mere capacity to expatriate capital is usually not easy if you're within the financial regime of a particular nation. It's a process, and most of the time it works, uh, but it's certainly not permissionless, and it's certainly not quick, and there's usually a lot of rules associated with it, but not in these crypto markets. Expatriate capital with the click of a button and pursue an incentive system with another click of the button. Quite extraordinary. Throw your comments. I'm going to go down the list and do what we do. Trentaloid's in the house. Much pleasure. Cap C. Hello, market enjoyers. And a set. Hello, Cap. Individualism is a big part of Austrian economics view. So, it's funny. I'm not traditionally trained as an economist at all. I'm an electrical engineer. But a lot of people over the years have mentioned my thoughts and ideas are like either perfectly aligned or pretty damn close to a lot of these traditional economic, perspectives or ideas or frameworks. And I'm not surprised because we're rational here. And so a lot of these ideas just mesh very well with the way a lot of people have thought and think today. So there you go. I'm a traditional Austrian, but am I? I actually am very fond of Keynesian economics and managed economic policy. And I think that's the real innovation of crypto markets because it's a merger of Austrian economics and Keynesian economics. What does that mean? So, sound money, Austrian economics, but sound money doesn't necessarily facilitate growth, which is where credit comes in. But credit obviously got out of hand, and that's where we find the world we are in currently, where they try and regulate the dollar, and then the dollar just goes offshore into the eurodollar market, and they start literally printing dollars offshore in the form of credit. Someone owes a dollar is equivalent to a dollar, and that's literally the system that they built in the eurodollar market. So there's plenty of complexity that crypto doesn't resolve with the system that they have created thus far. But I'm quite fond of mutable monetary policy. Interest rates and emissions were increasing and decreasing circulating supply of currency. See, the thing that crypto fixes is determinism and immutability of determinism, where the rules cannot be changed based on the subjectivity of a human, which means if interest rates are going to go up, everyone knows the conditions in which interest rates are going to go up. If they're going to go down, the same. So everyone knows what's coming because the rules are unchangeable. And that, to me, is kind of the future of economics. So sound money has certainly a place, but there needs to be immutably deterministic, mutable monetary policy that is immutably deterministic. How about that one? The numbers change. The rules that govern the numbers changing cannot be changed. Therefore, the way the numbers change are predictable. They're going to change a certain way under particular conditions. And to me, that is what fixes money, and credit's another story. So I'm not the person to fix a system, but I see fixes for the system. But there's a lot of geopolitical complexity in managing credit because anyone could extend credit to anyone. If you're in Austria and you are able to buy Treasury, U.S. Treasuries, long duration debt, and you want to raise dollars, hey, who wants to give me, issue a bond of sorts, and it's permissionless. So that's something I'm fond of, the concept of permissionless financial activity. But who's to stop anyone from issuing dollar credit? And that's where it gets complicated and geopolitical and enforcement and so on and so forth. So I don't really delve down the political realm of how to fix the system. But what I do is see how these components are extraordinary and an evolution of what folks have done financially over the last hundreds and thousands of years to produce a financial system that isn't stupid and is sustainable. And that's right now. And that's the systems we invest in. So that's why this is, by all means, the most extraordinary investment landscape I've ever seen. I started my first trades and speculations with Magic the Gathering cards. Yeah, I think we maybe us older folks did with Pogs in elementary school. I'm one of the oldest millennials, so we played with Pogs and it's kind of gambling, a little bit of trading. They had relative value. Oh my. So very primitive financial system, but it was in regards. So those are the good old days. Yeah, Magic, another story, and nowadays it's going to be wild because Magic has turned into global digital with the likes of Gods Unchained and plenty of other collectible digital card games that is globally accessible. Kind of changes the equation for valuations, which is interesting. Anywho, Tapsy did some reflections, and turns out I am bad at trading spot. Almost everyone is. So don't feel bad about that. Bad at trading perps. Bad at arbitraging interest spreads, but good at buying and holding small sets of businesses. Gives calm. The problem is expectations and time horizon. I literally told my cousin, wait 4 years. You're not going to, oh, buy this meme coin. It's going to turn $1,000 into $10 million. So, and that's a game against oneself to set reasonable expectations that are more likely than not achievable over time. And the reason I like this type of way of engaging with markets is because you're able to see a trajectory. So trajectory is right about now like XYZ. If it's how much does it cost, how much is it paying, how likely is it to continue to be paying? If it's immutable and deterministic, it's very likely to continue to be paying. And if it's offering a capacity for people to trade foreign exchange in these markets, is there going to be more or less money in these markets in the future? Is there going to be more or less credit in these markets in the future? And notice I'm not putting a timestamp on it. The future, which means what do you want to own? What businesses do you want to own? I want to own businesses in the future where these markets have $10 trillion flowing around in them. When do you want to buy them? Not in the future. I buy them now. What happens if some of them fail? Okay, that's the point of diversification. What's the odds of them not failing? Well, they're immutable and deterministic, so they're likely going to exist no matter what. The question is if they're so relevant. Okay, that's the point of diversification. And that's what I tried to teach my cousin. Accumulate, have more. So instead of accumulating individual coins or tokens or gas tokens, now you're thinking in terms of business, but you can't teach that to someone who's never owned anything in their entire life. So that's why I told him what I told him. So accumulate business. In what market? A market that is going to expand in the future. How big is it going to expand? It's going to expand a mind-boggling amount, like an extraordinary amount. When? In the future. Not necessarily today, but in the future, which means it's coming. That's the trajectory. So that's why I want to own business, immutably and in a deterministic way. Hope that helps. Diego, hi. I am DC. Hey, Cab, great topic today. I wrote out my 10 rules over the weekend, and number 10 was no MoFoMo. Hashtag NOMOFOMO. No MoFoMo and buy at a discount. So that brings up very pertinent ideas like, is there any discounts remaining? I mean, Bitcoin is literally up 378%. Not really a discount. And it's cash, so it's not an investment. What is a discount? Is a very philosophical question. Like curve is clearly right off the bottom. 99% of this fucking crypto community doesn't believe in shit. And then 99.9% of this crypto community doesn't believe in curve. And 99.99% of it, the community, don't see it the way I do. And I'm like, 46 cents. If curve is 46 cents in 5 years from now, and it's producing 50, 60, 70% of the money, I don't give a shit what the price is. But then again, if it's paying 40, 50, 60, 70% of the money, it's not going to be at 46 cents. It'll be higher. Is it going to do some asymmetric shit? Yeah, it does, great. It doesn't. It's paying deterministically. Can't change the code. So that is something, and the hatred toward it is clearly a manifestation of capacity for actors in these markets um, to have that kind of mindset that, and reasonable expectations. And the concept of business ownership and cash flow is just foreign. It's alien to people. I literally have had a couple of tweets I responded to over the last couple of days about like, oh, what are you going to do if you have 5 mil at the end of the cycle? What are you going to do? You're going to buy homes, and then you have 5 homes that you're renting, and you got to bust your ass maintaining them. You got to pay taxes and maintenance, and just worry about insurance and physical property. To me, it's a burden. I don't want that. Stocks, no. Fuck no. There's nothing there. Bonds, clearly, no. There's certainly nothing there. You can start a business, but guess what you have to do if you start a business, if you sell like a pizza shop or a chain of pizza shops, a franchise? You know what you got to do? You got to put in the work. Time. You got to get out and manage the business. So, that works. Great. There's a lot of work involved. So I'm not really into that. Oh, yeah, maybe own a business that's digital, that has no real estate, has no debt, has no human resources, but is catering to a market where trillions of dollars are going to be circulating and cycling and flowing and foreign exchanging. There's nothing else that's like these types of businesses. Nothing. But anywho, I'm obviously digressed. I am DC. Is there? But a discount, I may be curved, but that's clearly not going to meet the vast majority of uh, this market's expectations. So I guess the point of me saying this is I don't see many discounts remaining. Things have moved significantly, 2, 3, 4, 5, 6, 7, 10x off the bottom. And then you're not going to get the position size you necessarily want that will serve you the best. And that's okay. So one of the rules that I subscribe to is patience. And if you find something that's good, you'll see it. Size it right. If you can't size it right, it's not an opportunity. You must pass. But if you can size it right, do it. And that's not an easy process. But only you could define what that process is to identify when is the right time to deploy X amount of capital. And anywho, it's something we will all struggle with. And over the years, that like range, 500 to 1,000, 5,000 to 10,000, 20,000 to 50,000, and those types of ranges will change into the future. And likely they'll increase as more capital comes in, so you get more receipts from your businesses. Give it time. Time is the biggest expander of perspective. You'll have a very different perspective on these markets in 4 years' time, which favors the younger people rather than me, the older people. Yes, 10x is very reasonable expectations, but you got to put that into context. What does the 10x do? What are you going to do after the 10x? And a 10x implies what? magically selling the top. A 10x off what kind of capital? $1,000, 10x to $10,000. Magically selling the top. What do you do with 10 grand? I mean, seriously, what do you do? It's an actual question you have to answer uh, to really be prepared for scenarios. What do you do with that? That's why those tweets earlier about magically come out of this thing and next year with 5 mil. What do you do? Having a quantity of capital does nothing, in my opinion. You can't bank on shit if you have a bucket of capital. One, a bucket of capital melts, so you're probably going to want to denominate it favorably in varying denominations, like Bitcoin, gas tokens, meme coins, whatever the hell you want. Maybe even bonds and dollars, obviously. So, which means forex markets, which means currency spreads, which means understanding the currency expansion and contraction cycle, understanding macroeconomics. And that requires work. I don't want to do that work. I must be the laziest investor in the world. I just want to own businesses where I click a claim button. I mean, seriously? I thought that for a long time. It's like, what do I want to do for a living? I want to click a button once a week to earn income. Okay, so figure out how to do it. Okay, so that is what these businesses are. So now the question becomes, how do you get those businesses to pay you more into the future? Well, one, the businesses are going to pay you more into the future, but now you have to own more businesses. So that brings up a question like auto compounding and like the liquid derivatives and stuff like that, and that's like position size. What's a target position size? Have target position size. When I think of the portfolio, I think of like this artistic composition. Is it balanced? Does it feel properly structured? Like a sculptor looks at his work. Portfolio should feel right. So obviously that sounds very metaphysical or something like, what the fuck's he talking about? But at some point, that is a goal you should have. Your portfolio should feel right. That means you're acquiring gut instinct. And that's a powerful position to be in because your gut is a manifestation of your knowledge and the maturity of your ideology, your ideas, not ideology. And that's very useful. Hope that helps. Pesach Samat, Cap. Hi, Dan. How are you? Much a pleasure. Happy Passover. Yes, it is. Yes, it is. Good time of the year. Bullish DXY. Let's take a look. DXY is crazy with the yen doing what it's doing. And all right, finally, a little bit of a wick there at the top. This is crazy. Literally, Japan is just like full steam ahead in dumping currency. Everyone in the country is dumping currency, dumping currency, dumping yen, dumping yen. I mean, this has got to be the most stark expression of where the hell we are in macroeconomic financials, along with stuff like lumber. Finally wicking off the bottom, and that was just a massive push down through the monthly time weighted average price. That is a crazy, crazy candle on the monthly. And the last time we saw a candle like that was February of last year. Those are big candles. We got big issues with regard to commercial real estate and just real estate in general. And lumber is the primary expression of real estate expansion. So is real estate expanding? And there was a time in '08 that the mortgage was the bedrock of the U.S. economy. That's what everyone said. Weird times ahead, strange times compared to historical standards, historical norms. And that's a good thing and a bad thing. It's a good thing because we understand these crypto markets and where they're heading. It's a bad thing because a lot of people are not prepared for how the world is changing. And it's changing in profound ways that we're seeing coming to a head with regard to geopolitical conflict and And we see that manifest in financial terms with regard to disparity, homelessness. It's it's good and bad. Everything in life is good and bad. Anyway, um, hope that helps, MDS. I try and avoid macroeconomics nowadays as best possible, but we really do have to understand it to understand where things are heading. But how much am I going to say the currency expansion cycle hasn't even started yet? And everyone's just going to see that manifest in crypto markets. And that's why it's just going to get weird. Crypto markets are going to be an absolute frenzy as capital expatriates from nation states into this like cloud-like financial economy. And comparing this market compared to 21, the capital rails capacity to move uh, market cross-border, the bridges, that's an extraordinary, it's going to create an extraordinary flow of capital. It's going to be just a churn of capital. It's going to draw in a huge amount of capital because opportunity is what draws in capital. And right now, what you're having is, Cambrian explosion of pure financial enterprise that changes a lot, if not almost everything. Buddy, and I started with magic cards and to open up a shop. We closed it at the end of last year. It's changed, very much changed, and it will change again. Could take 10, 20, 30 years. I mean, look how many things we're on the verge of. Just robotics are going to change everything. Can you imagine? Like, there's no people at fast food in the future. There's no one stocking shelves at Walmart in the future. I mean, at some point, customer service is replaced with like on the phone, AI, done. You don't need people anymore for phone-based customer service. In-person customer service will stick around, like, you know, customer service at Walmart and Target and shit like that. There'll be a couple of people there. Um, but robotics replaces the vast majority of human labor, repetitive, relatively menial human labor, and eventually skilled labor. Look, home building. It's like uh, um, printed homes, or I've seen some incredible like pre-built homes, like modular homes, that just like technologically fascinating and just like these various metals, and it looks like a futuristic capsule from a spaceship. See some really incredible things. It's just gonna get really weird, guys. And I'm all here for it. A 40-year-old. I'm excited for the future. Last thing I am is afraid of change. The only thing I'm afraid of is social unrest and civility. But there's one thing government's good at. It's financing social civility. So, I mean, isn't that what they always do? Isn't that always their mandate, unspoken mandate, finance social civility? So I think about that a lot. You know, the world my kids will be in. Yeah, buddy, those were good days. I used to play a lot. I used to go to tournaments and do all that stuff. And oh man, I missed my Type 1 deck. I had the bomb Type 1 deck when I was like, I don't know, I must have been like 12 or 14, and I was I had a full power 9, and it was just lovely. Now I see folks like Not So Fast keeps it real. Yeah, he's got all the good stuff. Two of my favorite cards are like Library of Alexandria, Juzamjin. I love those guys. Man, that was so much fun. And it's an interesting way to invest and have those historic artifacts, those nostalgic artifacts of our childhood. And maybe that works. It clearly works for him. And I think about that sometimes. But not anyway. Not for me right now. Suzu on Taiki's show says he has a friend working on a protocol that will allow people to sell wallets. Will this ruin the point system or any other system that are untransferable currently? Well, bear in mind, sell wallets. Technologically, we need more information because a wallet is an address, and an address is non-transferable. Can you transfer the assets on address? Not really. Like you can't transfer voter escrow. It doesn't work like that. Um, That's not the way Solidity works. That's not the way these smart contracts work. So maybe you can encapsulate, like you create a new wallet and you encapsulate it, and it's like stuff on Gnosis chain and those types of like multi-sig wallets, and like it's an encapsulated wallet. So that gets interesting, and that creates new financial products for like managed portfolios and stuff like that for brokers. And I don't see that as really changing anything for individual non-custodial wallet owners, which is just basically an address. So it's interesting though, and you can only imagine where things are going to be heading from a managed portfolio standpoint. Very interesting. Raul, hello. James, thoughts on Tapioca and its ability to generate fees income? Trying to get an idea of how to size my position. We've been all waiting for Tapioca for quite some time. The technological offering is extraordinary. The tech stack is huge. I mean, it's literally a built-in CDP, literally a built-in Aave, clearly a capacity for cross-chain. So it's a monumental tech stack. You will only ever know the capacity to generate fees and income in a production environment, test and prod, or you got to see it in prod. So right now you're in speculative territory, and that's that's all that could be done, just speculating on future reality. So there is no way to get a sense of what it's going to be capable of, because that's based on consumption. Products and services is what the protocol offers. What kind of demand is there for the products and services? Clearly, there's a tremendous amount of demand for the bridges. Look at the explosion of bridges. Look at the explosion of stable coins. So these are the products that they offer. Plenty of credit built into the protocol. I'm just tantalized by what its potential is. The interesting thing is folks would be surprised how small a position could be. Uh, and that's something I've tried to encapsulate in like 1% to 10% changes everything. And then you're able to survive, because the most important thing is to survive into the future. So if you deploy 1% of your portfolio, goes to zero, you're good to go. If it goes 10x on the money, you just change the entire composition of your portfolio. And if you do that over and over again into the future, you rationally deploy capital at appropriate position sizes, 10 years time, you're going to have a radically different portfolio. And if you're choosing products that are productive and produce receipts, income, it'll be a radically productive portfolio in 10 years time. And one of the hardest emotions to overcome is underperforming, meaning, all right, so if it goes 1% to 10%, 10x, yeah, if you went all in, of course, if you went all in, it would have changed to a much greater extent. But that's not sustainable. That's betting and gambling and risk, not adjusted risk. It's just bad risk, because you're jeopardizing your existentiality. So just stay rational, be calm. Come on, you don't have to chase. You don't have to be greedy. You can have reasonable expectations and let time do the work. That's it. That's why it's so much easier for kids. And I have a cousin that's 17, and I've been trying to teach him shit, and he doesn't give a fuck at all. I'm like, just buy stuff, and he doesn't get it. None of them do. And you don't get it until it's too late, until you're 30 and 40, and then you're like, oh shit, I missed all that time, and whatever. You can't help everyone. In fact, you really can't help anyone but yourself. Arrows in the house, good afternoon. Lloyd, any thoughts on those proposed tax reporting requirements that require registration of all wallet addresses? Well, that was fake news, but from what's her name? Elizabeth Pocahontas. Warren. Um, honey pot. Don't drive yourself nuts. Define the rules. Be consistent with engagement. Accumulate cash flow positive businesses. Diversify so you cover the risk to a degree. And I'll see you in 4 years. I'll see you in 8 years. And I think our story will be very different in 4 and 8 years' time. I think we'll have some fun things to talk about. What do you think about GMX and GOP? Oh, Arthur sold his positions, didn't he? Isn't that interesting? That's what happens when you could sell something. Maybe it was a large position and he needed liquidity. So when he can sell something and he could acquire that liquidity, he exited. I think GMX is a big concept. It was clearly the first perp DEX on Arbitrum. Tried its hand on Avalanche. Didn't really bite too well on Avalanche. I think the perps are interesting, but I think I don't want excessive exposure to them. I like spot. I like primitives. I like base layer because I think in terms of forex markets. I think in terms of banking, and that's the scale and scope I want exposure to. Perps are just pure speculation and gambling, which can be quite productive. Las Vegas is a great place for business, but it's not something I'm too into. Food for thought, but that's my food and my thought. I know a few people who I'm sure are going to be in hot water once IRS deploys AI to on-chain forensics. I mean, that's quite the speculative statement. Wouldn't hold your breath. Half the country would be in trouble, and plenty of people. I mean, even if you did very granular reporting, it's probably not perfect. Even if you did some provider that does like robust crypto reporting, probably wasn't perfect. So it's not too much to think about. It's a complex topic, taxation, so on and so forth. Basically, do the best you can. Do well. Show effort to report according to what is expected of you. And if you had good intentions or reasonable intentions, that's all that matters. Be reasonable. Woosah. Woosah, ladies and gentlemen. Don't worry about people being in trouble. Worry about yourself. It's a one-player game. That's it. Hope that helps. Harshal, love the stream. What do you think about was a Liquid Driver? Are they going to do partnerships with Need? What do you think is a discount there? Now, bear in mind, they're very critical components to the system. The concept of recycling and liquid stake type products, disrupting circulating supply. I'm not interested in them personally. It was suitable for a cash position, but I don't give too much thought to the cash position. I don't give a shit just holding Bitcoin, even though Solana is probably going to run multiples on top of Bitcoin into the future. I don't care because that's not what the purpose of the cash position is. The purpose of the cash position is to have liquid cash on hand that you could spend for real world and spend for reinvestment. It's a transitory destination for capital. So I do not have the highest opinion for myself for liquid staking products. And I don't think in terms of discounted premium with regard to them either. I think that they, as the live tokens from Liquid Driver, I think they're going to have very nice effect on the kingdom, which is nice to see. I look forward to them deploying and the percentage signs showing up in the market and having the known effect on the market. I hope that helps. That's pretty much my 2 cents on the subject. Arrow, having a lump of cash gives you the flexibility to buy cheap, revenue-generating coins at the next bear lows. Oh my. Now you're thinking at a hell of a time frame. So in order to have cash in the next bear lows, looks like that savings account, that crypto savings account needs to go up. It means you can't invest in everything, can't own everything, and things are going to look sexy and exciting and number go up. Up-only mode is not here yet, but it's going to be here. And that takes an interesting mindset to not be always buying. Oh, cash is trash. Oh, the horror of seeing stable coins in your portfolio when Bitcoin's at $150,000 and it's the super cycle. Be different. Think different. And I think folks will be surprised with their results in 4, 8, 12 years. Gotta have cash. No one will ever know where top is, and it's irrelevant. What matters is how you define a cash position. Well, great, you have Bitcoin. Probably have some stable coins too. Probably have some Ethereum because you need to engage with the market and you need to pay those gas fees. Probably need your respective gas token on different chains. So you got some exposure there. You get a 10x, 100x in some of these gas tokens. That'd be pretty crazy. You know, you got a random $1,000 worth of Phantom, and Phantom goes 1,000x on the money. It's high market cap. That's probably not the most reasonable statement to make. But the point is, there you go. All of a sudden, you got $100,000 worth of gas tokens. So that's the kind of weird shit that's probably going to play out. Like Linnea is just Ethereum, so you don't have that asymmetry there. But Mantle's MNT. That'd be weird. I got like $200 worth of Mantle. Goes 100x on the money. There you go, 20 grand. What the? Where'd that 20 grand come from? Off $200. So you're going to be surprised the weird composition or the structure of the portfolio in due course, in short order, in like a year. Next year, you're going to be like, whoa. Because that's what happens when you monetize a market that has lowering and lowering friction and is a destination for capital expatriation. That's what folks are missing about why let time do the work with these markets. This is a destination to expatriate capital, where that capital is accessible from all countries, and that's why weird stuff's going to play out. Hope that helps. HMAC. Automation revolution is going to be tough for skilled and unskilled labor. Yeah. So I'm a software dev. At some point, AI writes the software. And that gets that whole, Skynet type of conversation. Like if software could write itself, that's kind of where we are in society, like in the next 10, 20, 30 years. And all you could do is watch and as folks figure out how it's all going to work. But it's going to get weird. I only got a couple years left, in my opinion, in mobile Android development. I mean, how is there not going to be a higher level language when you're like, uh, in some sort of VR environment, just like dragging and dropping components on the screen and hooking up to APIs? It's all just like high level, graphical user interface type design instead of writing all this. It's high level code like Kotlin or Swift and whatnot, or Dart on Flutter. It's relatively high level, but it's not like as high as it can be. And it's not automated through AI. So those are pretty much my expectations. I have a very short shelf life, in my opinion, for my career remaining. And that'll be a lot of careers. And clearly unskilled labor. As I said, there's going to be no human working at fast food. That's just from a financial standpoint. And there's going to be no human stocking shelves. It's also from a finance. Robotics changes everything from the balance sheet of the big corporations. Why employ someone at cost over time versus a one-time upfront cost and engineers for maintenance? So engineering will always be an in-demand skill. You always need maintenance and support, like physical interaction to repair robots, but I guess that could be replaced to a degree. Robots repairing robots. What the hell why do we need humans anymore? So it does get into some weird existential and philosophical questions. But engineering is still good into the future. Software development, still good. But it's going to get weird. HMAC, good statement. Anisat, love, vintage guy, played Legacy. Yeah, Legacy, Type 1 we called it. I love that stuff. Type 1 is old school. Alpha, Beta, Unlimited. I remember when Ice Age came out. That shit was crazy. Yeah, those were the good old days. Um, Anon, could one create a rental business with vote lock tokens and bribes from vote warden, etc.? So right now we see these products like Warden and Vote Market and the incentive regimes of the likes of Aura Balancer, Curve Federation, the V33 protocols. These are just financial primitives. At some point, businesses want to use them. To what extent? We'll see how meat space merges with these financial primitives. But they're going to want to consume them at some point because opportunity defines use. And if someone sees an opportunity, they're going to do something. So it should get interesting in that regard. Like this is all test net, a build out of an emerging market of emerging markets with a whole host of new financial primitives that has yet to monetize in the second currency expansion cycle thus far since inception. So these financial primitives I mentioned, it's not crypto as in like 2008 to 2020. Everything almost anybody that's listening to me is thinking about didn't exist prior to 2020. In late 2019, it was Lend, which was the origins of Aave. You had Psi, which was MakerDAO's original single-sided or single debt instrument. And you had Uniswap V1 with like $20,000 on it. That was like Q4 of 2019. So everyone, the time horizons were all wrong inspecting what the hell is going on in these markets. We are 5 minutes into these markets, and there was nothing in 2020 and 21. It was nothing. There was no bridges. It was so risky and multi-chain. Oh, Jesus Christ! It was nothing. Now you have literally bedrock infrastructure like Stargate, cross-chain messaging, layer 0. You have what's coming online with Tapioca. You have the capacity for MIM to be beamed everywhere. And then you have 1,000 bridges, which I list on Discord. Subscribe to Discord. In the L2 section. It's literally like a dozen plus, like pretty established bridging infrastructure at this point. Very, like, I don't even want to list them. There's just a lot. There's a lot. Stargate is like king of the hill, in my opinion. Wormhole's big too, and man, that W token has just been absolutely annihilated down to 62 cents. Anyway, Jesus. I mean, who did not sell their airdrop? It'll bottom, but who cares? This is just completely off the radar from like, it's not investable. There's no investment to be had. What, capital gains? Whatever. Who cares? Anyway. So yes, Anon, it's going to get interesting in the next 4, 8, 12 years. Lake Meadows, peace, Noah. As I progress in my journey toward life-changing wealth, anxiety often kicks in when I take a loss or I miss the pump. I have to remind myself the market presents infinite opportunities, endless. So from a capital gains and trying to like expand cash being like Bitcoin, Ethereum, stablecoins, gas tokens, cash. Yeah, I appreciate wins and losses, and I appreciate the anxiety, and we'll be here telling the story of how to engage a little different, sustainably. But I am fully aware to engage with markets the way I prescribe to. Still, you need a fair amount of capital to produce the revenue, and then the revenue, you're able to buy more things, and then it becomes recursive. Self-sustaining business model of sorts. So I appreciate that, and I can't define for anyone what that threshold is. Clearly, if you need $5,000 to live in Southeast Asia or some country in South America or Africa, whole different equation compared to the United States, where Middle class is really pinched at $200,000 a year. Bear in mind, our expectations are all skewed in the United States because even the middle class that is pinched, they make a huge amount more capital or income as compared to many other countries. So I think entitlement is a fascinating burden and complexity. What do people think they deserve? And that's all relative. It's a bias there because you see everyone around you. And that makes it complicated to really assess what, I don't know, I come back to like things, what do you need versus what do you want? And not a religious person, but highly spiritual. So I go to my wife to church, and I see through the religious stuff, and I'm like, I appreciate the humble or not seeking, not greedy, the whole Ten Commandments concept. I appreciate those types of ideas because they're meaningful to finding peace. Find peace, and that's how you will do better in markets. Breathe and let time pass. Less action rather than more. Well thought out choices for reason, good reasons, which is like confluence from a technical analysis standpoint. Find confluence. Substantiate your choices significantly, not like trivially, like really give good substantiation before you actually do something. Nothing Harshal on cap token until and see the thing about cap token is I need to be able to force payment for Discord in cap token to really do what I want because then you're talking about like the petrodollar. But I can't do that right now. I don't have a mechanism to do that. I don't have the tooling isn't there. It isn't. There's a couple of like Discord bots that can manage crypto payments, but it's so generic. And there's no way to like force. I need it on Arbitrum because I have a lot of voting capacity on Arbitrum, and that would make cap token interesting from a mimetic standpoint, a meme standpoint. So the appreciation could be actually quite interesting when I can throw 1,000% APR in cap token. But I'm not going to create something like that unless it has a purpose, and that purpose would be payment. For Discord, I would turn off credit card. You can't pay in anything other than cap token, and that's why I would have like petrodollar overtones to it, forcing payment in a particular denomination. One day, one day, maybe I'll have the tooling I need to be able to do something like that. Diego, I'm 22. At what age did you start accumulating businesses? Oh man, not to my 30s. Later. I mean, literally, this a lot of my mindset is really the last like 3 years. It's very recent. None of this existed prior to 2020, my friend. None of this existed. That's how early everyone is. And everyone, especially younger people, they get very excited over meme coins. And clearly, meme coins were very hot the last couple of weeks. Clearly, they've died down, and you're seeing a significant consolidation. And very interesting things playing out this type around, like Andy and because Bitcoin, that's very interesting. And what'll play out on base and WIF. I mean, look, it's just an extension of what Doge started. You'll have plenty of meme coins that have value, but it's a different mechanic, different mechanism. There's plenty of rationale why they're monetizing. Social organization, community, and these are big things in society. Um, what does that mean from an opportunity standpoint? That's another story. And accumulating businesses is really a concept that only made sense maybe 2, 3 years ago. I was just one of the earliest folks to really talk about these products, these protocols in terms of business structure. It was very early in that regard, and maybe my idea spreads, and then I can have a claim to fame. I was the first to talk about this shit in terms of businesses. Maybe that plays out. Who knows? Right now, it still seems pretty alien to most people. But it's the story I'll continue to tell because that's how I engage with markets. It allows me to be calm, cool, collected, and let time pass. And I'll look back in 2027 with portfolios at 20x where it is now or 50x where it is now and be like, all right. And then folks will say, how'd you do it? Go look back at my streams today. What we're talking about today. I just did the same thing I'm doing today, just in 4 and 8 years from now. Anyhow, Arrow, if you had the opportunity and desire to add to VE Nile or VE Ram, Nile, I was able to. I literally I got Ram at like Pico bottom 2024 is what it was. Got that thing at like 900K market cap. Nobody was looking at it at all. It was literally Pico bottom. And it was a modest position size. It was literally the same position size that we talk about with all the stuff that we've been talking about. Like we took the Nile, we took the Clio, we took the Velo. It was all the same position size. It just so happens that thing really went like 10x on the money real quick, more. Um, so now I have no capacity to add to the position size. Like I can't bump it 25%, 50%. I don't have that capital, nor do I really want to or need to. So V Nile is very interesting. It's a heck of a chart. Heck of a chart. I like the chart structure, but I mean 10 mil market cap, nice valuation. I don't need any additional exposure. It's my general sentiment right about now. Clio's coming off like double inverse head and shoulders, like boom boom, and maybe boom boom. This being a very little left shoulder. Ram bleeding down. But that's what these protocols will do. Protocols are emissions based, so there's just constant cell pressure, which gets overcome because of high APRs on the voting side. So the cheaper it gets, the more favorable it is to acquire, position, which is basically why there's like an inherent floor and curve. So if you get 20, 30, 40% of the money and you could buy it cheaper, it's quite the incentive to buy it cheaper. So it's a very interesting thing, this bifurcation of incentives that we've discussed. And it does create somewhat of a price floor because at some point it's just you're getting such a discount on cash flow. Cash flow, a very historic and traditional financial perspective to have on what to buy and what size to buy it in, because that's a big part of global financials is being able to purchase cash flow. Hope that helps. Arrow asking for a friend. um, I'm very interested in Linnea. Is one of the largest growing chains, period, across the entire crypto space. It's like second other than Merlin, which is, yeah, it's big brand behind it, consensus. So a good part, like, look, I have no Faro exposure on Avalanche, basically none at all. Like, I don't know, and that's particularly because Avalanche is completely owned by Trader Joe, and it's just, there's big real world interest in Avalanche, but it's been lagging significantly, so it's relatively expensive, 40, 50 cent transactions, and I don't know. It's going to be a very competitive landscape, these chains. But look at the totalitarian ownership of Trader Joe. But then again, you go over to like Binance Smart Chain and any of the chains for that matter, and the VE33s are right there at the top of the list. Boom. Solidly. Solidly with Equalizer and solidly. And Arbitrum. Solidly. And the list goes on and on. So it's something with the solidly tech is quite meaningful. But it doesn't, it's not still, it's not unambiguously or unquestionably investable. There's much more context that is required to assess a good investment, and that's why I have chosen to ignore Faro, 1.76 mil compared to 35. Trader Joe is just dominant, Let's take a look at mantle. Everything's rolling over a bit. Volume 18%. That's a bit. That's a lot. But look at Clio right up there. Pretty much a fight right about now. But this looks like a duopoly right here on Linnea, with Nile and Linex going back and forth, just constantly going back and forth. Finally rolling a little bit, 70% week over week. But look at that. The top decks on Linnea. It's a pretty interesting position to be in. And then an Arbitrum is Ramses with 36 mil compared to Camelot. I mean, Camelot had a hell of a head start. And nipping at the heels is Ramses. Uniswap's going to remain dominant because you can literally just look at base to see how that works. That's like 50, was it 10x? No, 5x, 6x. Uniswap is just owns base. But look at Aerodrome right there at the top of base. Go over to Optimism. Uniswap owns Optimism. Velodrome is there. 15, I don't know, for 12 and change, X away. Anywho, those are my observations. And they'll change over time as we look at the data. What was the delta week over week? Look at that. That's what we've been seeing. Base is rolling over hard in volume. Big dip in volume. Is there anything green on volume right about now? Ethereum minus 30%. Where are we all? No, the whole space is rolling over. DeFi rolling over 25% week over week. Vast majority of activity still on mainnet with 1.16 bill. We see it in gas fees. Gas fees have rolled over. So this is why you have to be comfortable and know why you own things to allow time to pass. Hope that helps. HMAC, thoughts on Pendle? Yeah, I wish I bought it at 90% cheaper. What else can you say about it? So there's some interesting voter escrow characteristics. I've had plenty of thoughts about voter escrow. So Pendle worked out well. There's what, it's a penny? Yeah. Mage Pie. So it's got its sterilizers, its recycling opportunistic protocols, but no interest. I missed my opportunity, and that's okay. I got no problem missing an opportunity. Tape pusher BTC EVM seem like a bit like RC Cola trying to disrupt Coca-Cola. Boom! There you go. I have a very high opinion of Bitcoin EVMs. What does that mean? It doesn't matter. What matters is this. I don't give a shit how popular and how big the TVL is on a Bitcoin EVM. Show me the volume. That's it. And then show me the stablecoins. That's all that matters. I don't chase hype. I don't care about hype, which is why I like Rolex better than Merlin or Stacks, because it's optimism on Bitcoin. I don't care about hype. I care about substantiation, confluence, due diligence, and in the end, most of my ideas will be okay. Some of them will fail, but that's where diversification comes in. You don't want excessive diversification. You want to favor concentration, but you need diversification. It's as simple as that. But that's a great statement, Tape Pusher. I have a high opinion of Bitcoin EVMs, but, show me the volume, show me the stablecoins. Right about now, look at this. So this is real. This is all heading in such a remarkable direction. 2.5% week over week increase in stablecoins in the crypto space. Ethereum is a positive sum environment. Volumes. This is like a bullish divergence. If you want like a technical analysis, phrasing of where the hell we are. It's a positive sum environment week over week with volume rolling over. Okay, so what happens when volume rolls over? It ends up going down and then it goes up. All right, that's the way markets work. Markets will market. Marginally negative sum, marginally negative sum, positive sum on Solana. Base is just getting monetized. Remarkable. So, you think this can be crazy activity on base. thing that comes to my mind is that a discount, $1.60? Can you acquire an appropriate position size of 680 mil market cap? Can you buy 1%? 1% of the protocol is $6.8 million. Can you buy 0.1%? $680,000 worth of the protocol. Likely not. Think in terms of ownership. Can you buy 0.1% of another protocol? I'm not going to point out protocols and spoon feed ideas and force an idea on folks, but maybe your targets are 0.01% of a protocol. Look at the outstanding market cap and assess what kind of capital you have to buy what kind of ownership of a business. And optimally, you want to own a significant part of a business. The more you own of a business, the better, right? I mean, you can't over-concentrate. You can't deploy too much capital because then you can't buy other businesses. But that's a separate conversation. But in this regard, you want to think in terms, how much of something can you buy? And is it a reasonable amount? Is it a reasonable percent ownership? And that's something important to consider that will give you a limiting factor. Can you invest or not? Do you have enough capital to invest? Is something at a discount? Because if it's at a discount and you could buy 1% of a protocol, that's getting interesting. Because maybe that discount is transitory. So assess whether it's likely transitory or not. Hope that helps. Ladies and gentlemen, of the Bripto space, I appreciate each and every one of you. 258 people made it to the end of the stream today. Please tell everyone to subscribe because we could do a little bit better together. Monday, April 22nd at 12:58 p.m. after party on Discord, the most rational community in the entire crypto space. I've been throwing up tweets with links to Spritz Finance, where you could subscribe to Discord using crypto from Arbitrum. That's Solana Optimism, Mainnet, obviously. But Spritz is a great protocol for real-world payments, virtual debit cards. Throw it on Apple Pay, throw it on Google Pay, throw it on Samsung Pay. It's literally a debit card that you can put stable coins or whatever the hell you want on there. So Spritz is big tech, been using it for quite some time. Wish you all a good one, and I will see you all later this week. Peace.